Apparently, Americans are sitting on a big pile of cash, and not just a big pile of cash. I mean a massive record amount of trillions of dollars of cash in their checking accounts. This is according to an opinion piece on Bloomberg about how the collapse in the US savings rate is misleading. That while it's true Americans are saving less as a percent of their income, this has apparently done nothing to negatively impact the massive amount of cash in checking accounts for Americans. Now, when I first saw this, I really couldn't believe it. So there are a few questions that I have about this data that I actually was not able to find the answer to that I'd kind of like to walk through, because while this does present some information that kind of flies in the face of some of the things that I've been saying, it doesn't address some of the concerns that I have about where this data is going or coming from and the assumptions that it's making about what this means for the economy moving forward.
Real quick word from today's sponsor, iTrustCapital. iTrustCapital allows you to use your retirement account to invest in Bitcoin, gold, and silver. Many people, when they buy gold or silver or Bitcoin for the first time, they just go out and they make the purchase, whether it's from a gold dealer or buying Bitcoin from an exchange. Later on, whether it's a year or 2 years down the road when the price has gone up a lot, they go to sell it and realize they're hit with a capital gains tax. This leaves people with a sour taste in their mouth when investing in gold and silver and Bitcoin, because they're saying, hey, look, I know that inflation is eating away at my fiat currency, my dollars, but if I put my money in sound money, if I buy gold, if I buy silver, if I buy Bitcoin, I'm going to get hit with a tax on it anyway. And that's why it's so important to take advantage of retirement accounts when you are diversifying your assets. The problem is most brokerages, most retirement accounts do not allow you to invest in gold or silver or Bitcoin or any other cryptocurrencies. That is where iTrustCapital comes in. You can buy and sell Bitcoin, gold, silver inside of your IRA anytime. You can use this retirement account to make new contributions, or you can even use old retirement account money rolled over into an IRA with iTrustCapital. With everything going on right now in the crypto industry, many people are concerned about any exchange, any place that allows you to buy cryptocurrencies, about security and fraud. With iTrustCapital, they never take custody of your assets. There is no mingling of assets, and there is no way for iTrustCapital to access clients' money. It is securely stored in third-party institutional storage that is cold storage. And it's a regulated trust company so that it is a legal IRA. Like I said, they take security very seriously, which is why I use and recommend iTrustCapital to invest in gold, silver, and Bitcoin for your retirement account. And if you use my link in the description below, there's a special bonus waiting for you as well.
So the very first thing that I did was I went and checked on the data myself here, and sure enough, checkable deposits and currency for households is crazy all-time high here. As of the third quarter, just under 5 trillion, meaning that this chart here is accurate, at least by how they're measuring it. Now, I've talked many times about the savings rate on this channel and how that is happening because of inflation, and people got more money, but they're having to spend more money, and all the stimulus cash that came in just went out and got spent. And this is one of those things that we have seen thrown around a lot, is this personal savings rate, and it's now at a rate that is lower than it's been since 2005. And so I've explained this as part of the classic boom bust cycle, where you have lower interest rates, and so that means people can afford larger amounts of debt because it makes the debt service payments smaller as that interest rate goes down. So people spend more money, they get more cash, they feel richer, you get a little bit of an increase in incomes as well. And then as a result of that, costs go up, and so people have to spend more and more money. So all that additional savings and income that they had eventually just gets drained out, and then the result of that is a bust on the other side. And so I've looked at this as an indication that a bust is right around the corner, if not already here. But how is it possible that it exists alongside almost a quadrupling of the total checkable deposits? Well, apparently, part of this comes down to how the personal savings rate is compiled, which could be very misleading. This number is estimated as a part of the same analysis that produces our GDP. And so while during the first 2 quarters, we had a technical recession, but there were also other things that didn't show recession signs like job growth, manufacturing, retail sales. Apparently, the data for GDP was an outlier. And so this could have affected the national savings rate estimate. Now, the second thing here is that people have been cashing out of stocks and bonds as they've been crashing. So we've got 2 potential pieces of information that could be skewing the data here, showing that, hey, this savings rate doesn't really compute now that we know the massive sheer amount of dollars that are sitting in checking accounts across the states. But on first glance, these just don't seem to be anything that could cause these numbers to be skewed so severely, because it wasn't just during the first 2 quarters of 2022 that we're seeing this mismatch in information. Personal savings rate topped out in the beginning of 2020, which is exactly what you would expect given the stimulus, and it slowly declined from there. So this wasn't just a matter of 6 months or 2 quarters of bad or skewed data. This is right on par with exactly what you would expect. A bunch of money gets sent out, personal savings rate skyrockets, and then tapers off from there as people spend more and more of that money. And then as prices go up, they have to keep on spending more of that money and then tap into their original savings. Further than that, the amount of cash checkable deposits has continued to rise. There's not just 1 quarter or a few months of odd data here. And second, the speculation of some sort of a sell-off in stocks and bonds makes sense for a little bit, but not $4 trillion worth, especially considering this is retail we're talking about here. Retail is typically the last to sell. So you would expect if there was a bunch of selling that this would be done by institutions, by the large traders, the big money, not retail, not households. Further than that, most people who own stocks and bonds own them in their 401ks, so this isn't going to show up in the checkable deposits number. It's not like most people have most of their money just in a brokerage account and they're clicking sell and transferring it over to their checking account. That's just not what happens with most Americans. So if neither of these 2 explanations work, if it's not about the US personal savings rate data being skewed and it's not about people selling stocks and bonds, then what is the answer? Where did all this cash come from if most Americans are spending through all of their savings and are saving at the lowest rate since 2005? I cannot confirm this for sure until a few months from now when this data comes out for 2022, but I believe the answer has to do with breaking it down by income and net worth. In February of 2022, Chase released data with data from December of 2021 talking about cash balances at year end. And what they did was breaking it down by income quartile to show who was able to hang on to their stimulus checks. And while during the year of 2020 and 2021, most Americans were able to hang on to a significant chunk of their additional income, we can see a huge difference between the bottom 3 quartiles and the top quartile. In fact, for the bottom half here, these bottom 2 lines, you can see that following the stimulus checks, the numbers decline. They trend lower after this stimulus check and this stimulus check. The numbers trend lower. Whereas in the top 4th quartile for income, after the stimulus check, these incomes actually trend flat here and start to curve up. And if you don't see the curve, that's fine. At least you can see that at the very least that's flat compared to the declining trends of the bottom half. And so obviously we do have to wait until and if Chase releases this information again for the year of 2022. But the year of 2022 was marked by some of the highest inflation that Americans have seen in decades, and by some measures, ever, which would stand to reason then that most Americans would be spending through these savings during the year of 2022, especially given the fact that at the end of 2021, their average account balances were between $2,000 and $3,000. That doesn't last that long. When your lease renews for higher, when your grocery bills go up, when your gas goes up and everything gets more and more expensive, it is pretty easy to burn through just a few $1,000s. But the money supply in total has barely changed. It has declined slightly since the end of 2021, but not much, which means all these trillions of dollars that were printed in the beginning of 2020 and through 2021, they've gone somewhere. Initially, a lot of it went to individuals who are able to then spend that money. But once it's spent, it trickles up. This is the insidious nature of an inflationary monetary system that exists on artificially easy credit and money printing to finance government spending. People who don't know any better beg for a bailout, they get it, they spend through all that cash, bidding up the prices of all of the goods and services that they need to keep buying, and all that money trickles up to the businesses that were kept alive by the government in the first place. This is corruption at its core because an inflationary fiat monetary system is what funds corruption to begin with. And it makes sense of the seemingly conflicted data of Americans saving less while checking accounts continue to rise because for some people, checking accounts have continued to rise and rise quite drastically. While for the average American, their savings rate has gone down as they've had to spend through all that savings. Now, I'm sure that there is a little bit of both going on here. I'm sure that there's some data miscalculation, as there always is, going into the US personal savings rate. And I'm sure for very many people, it is definitely not as bad as that part of the data makes it seem. But for every argument on that side where you can say, I'm sure it's better for a lot of people, you can also say, hey, guess what? This inflation, this monetary policy, this system built on debt and inflation that our government has been abusing for so many years to benefit themselves, it is also hurting a lot of people whose voices are not being heard, which is why I'm so critical of the Federal Reserve, even when they're doing things like right now, which is raising rates and letting their balance sheet bleed off, even though that's the correct course of action, because it's causing pain to people that would not have been feeling that economic pain had they just kept their dirty hands out of it to begin with. And on top of that, I know that when push comes to shove, they're not going to make the hard decisions that are going to be healthy long term, even though they're painful now. They'll always try and kick the can down the road, even if that means kicking the bottom rung out from under the ladder. And finally, don't let this discourage you because all of the best economic problems come with the best economic opportunities for those who are prepared. And so if you'd like to take advantage of this bear market and buy the best companies in the world at the best prices, and you want to know how to figure out whether these companies are actually on sale, get my bear market investing guide, $99 for the holidays, linked in the description below. As always, really appreciate you guys. Thanks so much for watching. Have a great day.